Hey everybody, welcome to another edition of Market Talks with Dr. Stocks. This is Dr. Tom Carr, aka Dr. Stocks of drstocks.com. That's drstoxx.com. This is coming to you from the live trading room. And if you want to join me and a whole big group of amazing people, all different levels, skill levels with trading, some are brand new, some are trading professionally, and everybody in between. Go to the drstocks.com site, click on the subscribe menu, scroll down to the live trading room, and then you can join us from there. If you want to add on our new, relatively new, 7 months old now, live options room, you can do that at a 40% discount, and then you are good to go in both rooms. All right, I'm going to jump over to some charts. So we're in the middle of a very good market day. This is the 10-minute chart for the Dow, the NASDAQ, the S&P, the Russell. You can see they're all trending higher. We're seeing the Russell, the 2,000 small cap stocks, leading the way higher, 2.5%, more than double what's going on in the S&P and the Dow, and that's good. That's really good. Why is that happening? Well, largely because we had a CPI print this morning that came um, in line. I would have to say overall it's in line with expectations, and there was no major indication of inflation caused by tariffs. That's very, very good because, of course, the market's been worried about that. And yeah, so it's just a good market, and we've been in this kind of holding pattern. I'll show you here in just a minute. We've been in a holding pattern for a couple of weeks now. Market's still a little bit uncertain about the tariffs and about inflation and about the jobs data, which came in really kind of weird last month. And stocks are getting maybe a little bit overvalued in some certain sectors. The AI thing is not quite panning out the way people thought it would already. So market's been kind of in a stall, we'll have to say, and that's nothing bad at all. That's a consolidation. It's the market's way of discounting valuations over time rather than by price. And now I think we're starting to print a new leg higher. So that's all good, right? All good. So here's the S&P 500. This is the micro E-mini contract for the S&P 500. And you can see all these red days in here. There's 5 of them in a row. Then here's a 6th one, a 7th, and an 8th one. Those are all days that were a bit on the more frustrating side when it comes to seeing your profits. You might have great profits in the morning because the market's gapping up. Some of your favorite stocks are gapping up. The mags are gapping up. And then it's just a trend down day all the way into the close. We had several days like that. All right, that's just part of trading. It's not anything we can do. There's nothing we can do about that. We have to, be reasonable with our stops. We have to give ourselves, a certain amount of room when the market gets like that. And we have to take our stop losses like big girls and boys, right? Put on our big panties and take our stop losses. That's just a part of trading too. We go back to Friday of not the last week, but the week before. That was an ugly day, right? The market did 4 down days in a row. It was an ugly week. On Friday, it gapped down and it just kept on trending lower, and it took out all kinds of stops and all kinds of previous support levels. Sorry. And I myself was starting to get a little bit worried. We saw a big spike in the VIX and a lot of puts coming through the option flow indicator. And yeah, it just didn't look that healthy. And then on Monday, we gapped down at the open, and it was all uphill from there. And that was a beautiful day. So one of the best trading days we had was on that day, right? We got in a number of positions early, stocks that had stopped us out a little bit higher, right? We got stopped out up in here and early morning there, and then we were able to buy back down here, and that's how you trade. It doesn't always work that well, but it certainly is nice when it does. And, we have to actually go back and see that we've had these sorts of red day periods where the market is trending lower from morning to afternoon before. Here's a set right here. Here's a set right here. Here's a little set right here. And if you go back to the tariff fear, the tariff panic, you're going to see a lot of days just like that. And what happened afterwards? Well, we got hit the April lows. It was all uphill from there. All these little pockets of concern throughout the intraday period have all just disappeared. And now we're looking at pushing back the China tariffs. We're looking at making deals with China and EU. There's no indication that tariffs are inflating American prices. Our food prices have gone down. Our rents have gone down. Our home prices have gone down. So gas is still pretty low. So all is good, right? We're just in a nice bullish trending market. So that's all good. Now it's not going to last. So just one little thing that I want to throw this out there, and I'm not. We trade one day at a time, and we try not to trade too much on the way of prognostication too far out. Right? We always have a prediction of the next couple of days or the next week or so. But I do think that I'm going to agree with a guy in my pro trading group. I'm a member of a group of about 20 traders. We all trade for a living. We share ideas back and forth. We all are coming at the market from different approaches, and it's a very healthy collective for me to be a part of, because I'm always picking up tips and seeing things that I wouldn't have seen otherwise from their eyes, from their perspective. So there's a guy in there that does cycle indicators, and he is. This is actually one of his proprietary indicators down here at the bottom of my chart, showing you long-term, medium-term, and short-term cycles. And he was. Let me preface by saying this: he was right about the March, early April crack. He predicted that. Not that he didn't know it was going to go that far down, and he didn't know why it was going to go down, but he just said we're coming into a bearish cycle, and he said that somewhere in the middle of March. And then he correctly called the bottom near the April 7th low and said we're now entering into a bullish cycle. Okay, so he's been right in two very big ways. He's been a little bit off since then, but it's not anything major, and it's just like a couple of days. He's saying a cycle will start on this day, and it actually starts 3 or 4 days later, and vice versa. Now he's out saying that we're going to get a bearish cycle coming on soon, but not until about this week right in here. So not this week, not the next week, but early the week after that, around the 23rd, 24th, something like that of August. I guess the 23rd, 24th, it would be the 22nd. 22nd of August would be Friday, and then we'd go out to Monday the 25th. So somewhere on that weekend, right? He's predicting that we're going to get a minor, not anything major, not a major pullback, not a 5 to 10% clip, but some sideways churn, some softer action, maybe some profit taking coming out of some of the big stocks that have done really well. And September also happens to be seasonally quite weak. Now, everybody's been saying August is weak, but if you look at the range of data points for August, and if you look at what August usually does in the second year of a presidential cycle, which is where we are, it tends to be, really more flat than down. September, however, is a different story. September is the weakest month of the year, and I think given how far we've come off those April lows, it seems reasonable to assume that we're going to have some more challenging times ahead, shall we say. Now, we get to like the mid-September, and maybe the third week of September, and all of that consolidation has already taken place, and then we're going to get a really nice rally into the end of the year. That's his. Just looking at the cycles, that's what he's saying, and we won't do any trading until we get there, but we'll keep our eyes open for that. Okay. So all-time highs today. And not even on a closing basis, just all-time highs. And there we are. That's the S&P 500. The NASDAQ is in similar position. It's maybe not quite as robust off of the lows down here near the pink zone, right? The S&P was well above the pink zone and still above the 50-period moving average. The NASDAQ actually, still above the 50, but got down to almost the pink zone of the LRC. That's a little bit more of a bigger move away from the mean, right? Because that's a 2.0 standard deviation. But nevertheless, recovered nicely, back up, new all-time highs, and it's being led, I like this, it's being led not just by the mags, which are a little bit on the mixed side today. It's being led by some sectors of the market that have been lagging, right? We're seeing some biotechs emerge. We're seeing some healthcare stocks, energy stocks, some retail stocks. I wouldn't say there are too many that are exciting right now. And then we've got a lot of growth names and small cap names that are also doing really, really well. And I'll show you some of those in just a minute. Now, here's the small cap index, big green stick today. It's not a buy right here, as my rule of the big green stick goes. You don't want to buy here at the top of a big green stick. Here's a big green stick. If you had bought at the top, you would have been underwater the next day for a fair bit and for several days after that. So you could have gotten in at a lower price. Big green breakout stick, and you're right down the next day. It doesn't always happen. Sometimes you get several big green sticks in a row, but that's the exception, not the rule. Um, I also happen to think that we're seeing a lot of bearish divergence coming into this high here in late July. And I think we'll probably stall and roll over there for a little bit in the small cap index. So I'm not keen on them just yet, but we sure want to be. Now we're long between the two rooms, between the live trading room and the live options room. We're long the NASDAQ 100 with TQQQ calls. We're long the tech index XLK with TECL, the leveraged ETF fund. We're long SOXL in one of the two rooms. I'm forgetting which, although maybe I banked that one. I'm not sure. But anyway, we were long. We were long. And we have a handful of tech stocks in both rooms, Google and some others. So I would prefer to kind of focus on some standard plays that are driving the NASDAQ to new all-time highs rather than the more experimental plays that might be a lot of fun for a day, but then a lot of them aren't doing all that well just yet. All right, so that's the S&P. The gold is starting to print a possible little reversal here after the new all-time high, couple of days down. Nice little reversal stick here at the 21, just above the 50. Everything is rising. I don't have a really good read on gold just yet, or on the miners. I would love to jump back into the miners. We had a really nice trade in GDXU that we got out of that at the target last week. We had a really nice trade in AGQ, which is the silver leveraged fund in the options room, and we're just not ready yet to jump back into either one of those. Okay, so we've got oil down a fair bit today, and it's starting to test some of the recent range lows, and not a bad thing, not a bad thing at all to see oil falling in the sense that it helps margins and profit ratios for bigger companies who, normally it would be a tax. When the oil is going up, it squeezes their margins. So that helps. But we don't want oil to be falling because the economy is slowing down. So that's a possibility. We're not seeing that in the market, but it is a possibility that that's why there's just less demand on oil. And I haven't really been following the news on oil, so I don't know if there's more production causing this or not, but it is down there at the range lows. At the same time, energy is up. So the energy index is up with oil down. And that's a very bullish thing for the energy stocks. If they're able to really do well when their main product is falling in price, then that's a very good sign. So we have a red to green move on Bitcoin today, and it's just been kind of just inching higher all the way up to almost new all-time highs. Your new all-time closing high is, where is it? Maybe we're at it. We are just by a smidge. We're just a smidge above the all-time closing high for the Bitcoin index. This is the micro e-mini Bitcoin. We're long this one in the live trading room. We're long IBIT calls, IBIT calls in the live options room. And I've got a little bit of Ether still on in my own trading account, but I don't think we have a position on it. ETHU we had on in the live trading room. It hit our target. We're out with, I don't know, what was it, 32% win, something like that. And here it is up another 5.8%. I think Ether, we just need to let it kind of cool off a little bit because it's getting to that place where you could get really trapped in a bull trap. So we need to let it cool off a little bit, do a sideways thing like you see with Bitcoin, and then we can get back on board. Okay, that's all for the indexes. Let me take a quick look at the mags. We'll sort these worst to best. CRM, The world's biggest software after Microsoft is, you know what? I haven't looked at this chart in ages. It is down at the April lows. It's not a good thing, of course, because the markets is way up above that. Something's really wrong with this company. But for a short-term bounce, it is printing a hammer candle underneath the LRC, which doesn't happen very often. It's not a buy just here. I would wait to see a green stick tomorrow on decent volume. If you get a big green stick tomorrow, um, here's the one exception, by the way, to buying a big green stick. Stocks falling, hits a level of support, prints some sort of a reversal bar like a doji or a hammer, and then you get a big green stick the next day. That's a big green stick you can buy. That is one. Like this one right here, big green stick, right? After a long drop, and then several weeks later, it's much higher. I'm not saying CRM is a buy. As I said, you've got to get a bullish follow through the next day. We're not there yet. We're long Tesla, we're long TSLL in the live trading room, and we're long Tesla calls in the live options room. And I really am trying not to duplicate trades in both rooms, but the market opportunities are just so good. They're just so good that I want to share them with both rooms, right? I can't help myself. And we have a lot of members that are in both rooms, and there's not much overlap. One or two trades out of 10 or 12, but that is one where there is some overlap. And it's a little bit of a gap and crap day for Tesla. They had some news out that they had a little bit of good news last night, and then they had something that was a little bit of a concern to the market, and it did slide a bit into the red. And now we're back up to flat on the day. If Tesla's flat on a bad news day, and it's already it's up about 30, 40 points from this little pivot low here at the beginning of August, that's a big move, right? 12, 13%. If it's already made a big move and it's still flat on bad news, that's good, right? You just hang on to those shares. Don't sell them, hang on to them. Amazon has not been very good since the gap down on earnings, and we did try to swing it. I'm not remembering how that came out and whether there were shares or calls, but it just hasn't been able to get above the 21. You can see just how important that 21 EMA moving average is, right? 50 is crucial. 200, of course, is the granddaddy of all moving averages, but the 21 EMA is very good for short-term read on the chart. You want to see it moving higher. You want to see price above it. And whenever price gets down into it, you want to see it bounce cleanly off of it. All right, we're underneath it. It's not uptrending, and price keeps banging its head on that and can't get up above it. Now, this could be just a little bit of consolidation. You've got this big earnings gap, which is a bearish gap to the downside that tends to act as a ceiling. And yeah, we'll just have to wait and see. But I'm not in Amazon anymore, not even in my long-term fund. I'm not in Amazon. I don't know. Ever since Amazon, I like what they're doing, right, with the AWS and moving into more of the AI space. But to me, it's just still a very slim margin retail play, and we use it all the time, of course. But man, we buy so many things from Amazon and return half of them. I don't know how they're making any money from us, other than our Prime fee every year. Okay, Netflix is it's not a buy here because this could very well morph into a bear flag, right? So we don't want to get caught at a um, at a major moving average, the 50, from underneath after traveling a fair bit, and from an oversold perspective, right? You oversold, relief rally back up into a level of resistance, and then typically what happens from there is it rolls over and it comes back down and prints a new lower low. I don't know if Netflix is going to do that. There's nothing in the chart that tells me that's going to happen, but it's just not a setup. It's not a new buy setup. If you're long Netflix, keep your stops moving up, right? Take a little bit of profit off the table. It's worth holding here, I think, for a breakout to the upside, but you really want to see that close above the 50. Nvidia just keeps rolling on higher. So we've had Nvidia in both rooms at some point or another in this whole run, off and on. And I just have to say it's a great hold. And in fact, I wouldn't kick anybody in the pants for buying Nvidia shares or calls today, because this thing is the number one tech stock. It is, I think, now still the largest with Apple's fall and Nvidia's rise. I think it's the largest tech company on the planet. I could be wrong about that, and it just keeps getting better. Right, the 15% tariff thing on China, that didn't slow it down. China is saying the Nvidia chips are dangerous. We can't buy them anymore. That didn't slow it down. So what's going to slow it down? I don't know. I have shares in my family fund, and we go way back 7, 8 years now with Nvidia, and I have no plan to sell it. And in fact, if I had one stock that I would hand on to my kids when I'm done investing, it would be this one. I could be totally wrong. I mean, it could come out next month with a horrible report and a new CEO, and it just goes downhill from there. That happens with companies all the time, but I just don't see it happening here. So Apple's back on track. It is now that it is above the 50, the 21, and the 200. It is technically in. It's out of my no-go zone. I've taken it out of timeout, put it back into the playroom, but now it's got to give us a buy signal. And technically, I guess you could have bought it somewhere in this area right here as it crossed over the 200 on very good volume as a breakout play. Right, here's your consolidation, breakout, confirmation, follow through. That would have been a nice entry about 222. Here it is at 230. But I'm not sure I would buy it as a swing trade here at 230. I think I would wait for a little bit more of a dip, or for it to print a bull flag, which it seems to be doing now. We're long Google, and yeah, this one's good. IBD just added Google. I'm sorry, it added Google about 2 weeks ago, down in this little breakout here. That one right there. And I want to talk about that pattern here in just a minute. They added it down here. They doubled up today or yesterday. It was this week, yesterday or today, I forget. And so they're adding shares of Google, and IBD leaderboard is a very conservative approach to the market. It's tech oriented, but it's very conservative. I love it, and I keep track. Right, I'm an IBD partner, so I have access to all of their tools and bells and whistles and all kinds of good stuff. That's the market surge is what I used for scanning, and leaderboard is what I use to determine who are the leaders in the market, more or less. They're not always right, but most of the time. So Google is coming up here. It's not at an all-time high just yet, but it's getting very close to one. Your all-time high is up around 207. It should get there in the next couple of days. And let's just take a quick look at the weekly chart, because I'm interested in this. Yeah. All right. Well, this is interesting. I want to put on the divergence indicator and just see. All right, good. There's no bullish divergence up here. Not that that is a deal killer, but when you see it up at a new all-time high, as here, even here, that's not a new all-time high, but it is a little pivot high. When you see it happening up there, then start to trim and trail. Trim your position, put profits into the bank, and raise up your stops, because you're more likely than not to get a pullback of some kind. We're not seeing that, however, and so what could happen here is we just get a breakout to new all-time highs above that level. That's very possible. And with the market doing what it's doing right now, I think that's likely. So let's take a look at that. Let me get rid of some stuff here. Let's get rid of this guy. See ya. Okay. All right, so here is Google, right? Everything is down low off the tariff crash in early April. Everything's kind of moving back higher. Google took its time, which in my mind, I mean, I remember looking at the Google chart, being asked what do I think about it, and I say it's not ready yet. It's not ready yet. It was doing all this stuff, right? Red day, green day, red day, green day. It would break out, and then it would trap the bulls and come right back down into a moving average. break out, trap the bulls, come right back down to the bottom of the LRC. It wasn't consistently trending higher, and there were better charts out there than this. NVIDIA, case in point. However, when it got to this level right here, it's above the 21. The 21's now starting to rise. The 21's above the 50. 21 starts to cross the 200. You're starting to see some constructive bullish action in the moving averages, and you're getting a rise in the MACD. That's not essential, but it is a good thing to look at. And we have this little pullback right here, but it wasn't a trap. This was just a simple little sideways, little almost like a bull flag, right? There's your bull flag. And then on that, was it? No, it was this green bar right here. It was actually quite up high, and then it went back down low. Took out a bunch of stops on the shorts at the top. Took out a bunch of longs on at their stops down below, and closed above the open in more or less the middle of the range on very good volume. That to me was when Google became a buy. And it's down there at 176, and now it's up at 203. So that turned out to be a very good buy. And I think it was that green bar breakout right there, what we might call a pocket pivot, was when IBD got on board for the first time. Their first buy was back down there, 178, 179. Okay, so all good, all good. Microsoft is, oh, I like this actually. I haven't looked at Microsoft for a while. It was a big up on earnings. It was a gap and crap. It closed the earnings gap. Not always what you want to see. Maybe just, the market got a little bit ahead of itself, and we've had these days where things start high and lower, and it's hitting Microsoft. But I like what it is doing here. This is a very tight range. We're down into the bottom of the LRC, the 21 rising. 21 is rising above the 50, 50 rising above the 200, 200 is rising. And then we have this nice little green bar. This is a buy, and I'm going to put it on my buy list. I'm going to take Google off because it's more of a hold right now. Avgo, yeah, nice. It looks a lot like NVIDIA, and as well it should, because this is maybe the second best. Forget AMD. This is the second best semiconductor play, fabulous play in the market. We're long Facebook. We just got long this morning right off the bell, and it was this little. This is a power gap. So what is a power gap? When you gap up on earnings, and that gap stays open for I don't really have a number, but maybe a week or 2 weeks. When that gap stays open, you kind of come down and you test the gap and you bounce back up. That's a power gap. Power gaps are very bullish. Now, they don't usually lead to a lot of exciting trending after that, because typically a power gap takes a little while for the market to figure out that, yeah, it is indeed worthy of this higher valuation. But when they do get going, they usually do really well, and they are a rather low risk kind of trade. Right? Usually, if you can stay out of that earnings gap, and you hear the myth, all gaps fill. Well, no, they don't. In fact, earnings gaps, power gaps rarely fill, and they don't have to fill. There's nothing. A gap is not a magnet. In fact, more often than not, it acts as support from above and resistance from below. So we got along Facebook, and yeah, this looks very good. All right, that's that for that. Let me show you. I've got a long list of charts of interest, and not all of these are doing really well. So we've got the quantum computing names. Most of these are out with earnings tonight, tomorrow. Maybe they already came out last week. We're all sort of in this cluster of quantum computing names giving their earnings, and I think the market's still a little bit skittish about that whole group. It didn't help that Jim Cramer in his show last night. I never watched his show, but I saw this on Twitter that he was very keen, very bullish on the quantum names, and of course, down they go the next day. But that said, there are some really good setups in this group. IonQ is one of them. It had earnings a couple of days ago. It looks like it was a miss. That's that red downward triangle. But the market gapped up on that news and gapped down the next day and rallied back up, rallied back up, rallied back up. 3 up days in a row, and the market's been doing the opposite. That's bullish. And a little bit of a consolidation inside day bar here. I think this looks pretty good for a buy. I know we got stopped out of Galaxy today. I had the stop too tight. This is a short squeeze play. You don't buy this one for its amazing fundamentals. You buy it for the kind of price momentum that it can really show you when it breaks out of consolidation. And it sure looked like it was breaking out yesterday. That's when we bought it, and it didn't follow through today. So kind of glad we're out of it. Don't really want to get back into it, but keep an eye on this one because everything else is in the right place. We just need to see it get a bullish volume coming in and close above. Let's mark this a little bit. There you go. Close above that resistance line. Rocket Labs is, we're not in calls in the other room, but we have some short puts on this one. In the options room, we're selling puts. We're doing a wheel play on this one. And it was a good day yesterday, not such a good day today, but we'll see where this one goes. Let's take a look at MicroStrategy. So with Bitcoin is weak this morning. MicroStrategy was weak as well. Bitcoin came back up, but MicroStrategy has not come back up. So thankfully, we took profits on, we had MicroStrategy on in one of the two rooms, and I'm forgetting which, and we took our profits and walked away. So we'll keep an eye on it because it's such a great trading vehicle when it is behaving itself, but it's not behaving itself today. I think Upstart is a software play. It was a very good earnings report, but the market, for whatever reason, sold off. Big red stick, little bit of a dead cat bounce, and then another leg lower to test the bottom of the LRC and the 200, and it's a doji today. So it's not a buy yet, but I do think this one has a good future, very good growth, and market analysts like it, market likes it. It's been in a nice uptrend off of the lows, so let's keep an eye on it for a nice swing off the 200 here. Okay, this net looks good. It is a software play, very good fundamentals. I was out with an excellent earnings report a couple of weeks ago. It did sell off a little bit after that, but it was just profit taking, right back up again, new all-time highs, 4-day pullback into the 21. I like this setup. In fact, I kind of like this so much, I might get us, I'm looking for one more trade in the live trading room. Maybe this one is it. I would avoid coin for now. It's got the gap down on earnings. That's not good. It hasn't been able to get above the 50. That's not good. We had on CONL calls that we bought down here in that little green stick, right? We sold them at the open today, and I'm glad we did. We took a decent profit, like 30% or something on our calls, not a big trade, but I didn't like the action once it got very near to the 50 and started to roll over on a day when the market is going higher. So that's a bad clue. Now, RGTI announces earnings tonight. I love this setup. This is one of my favorite setups, right? Big green stick down into a moving average support, bounce up, and then consolidation right underneath a slanted pullback line. And if earnings weren't out tonight, I would be buying this for a good breakout move to the upside. It's not quite a pocket pivot, but it is similar to that. It's a similar kind of setup. Okay, HWM is, in my opinion, your best play in aerospace defense and is very tight, very, very tight right here. Earnings are out of the way. It already did a dividend disbursement, and it's holding the pink zone, uptrending LRC, 50-period moving average, little doji today. Watch this one for this kind of move. Boom, 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 right? This is from 122 to 166. That kind of move is the kind of move it can make, and I think we've got another one, maybe 180 to 220. That kind of move is coming soon, just not, doesn't look like it's going to do it today. Let me do a couple of more, and then we will, I'll take chart requests. If you want to start typing chart requests into the trading main room, I'll take a look at those here in just a minute. Okay, VRT is one we're in the live trading room. It is showing a modest breakout today. This is a very strong growth play. It is on the IBD leaderboard. It is in the IBD top 20, at least, if not top 10. And I have some in my own, in the family fund. I really like this one a lot. Energy play, energy data center kind of play. TMDX is a fun stock to trade when it's going really well. And I did note this earlier. I'm not sure this is the valid, it's not very well formed, but it is a possible inverted head and shoulders continuation pattern on the pullback. And that's usually pretty good. I mean, that's a very bullish pattern if that is indeed what we're seeing here, because the continuation usually goes all the way to target, right? So your bottom line down here is 100, your neckline is up here 130. That's a 30-point spread, so 160 is your target. That's a nice move. EXTR is a new one for me, but I just found this in my IBD Market Surge scanning tool, and it came up on my A list scanner, which is a very, very strong. All the very strongest stocks in the market are there, and I like this little. It needs to be a little bit longer of a bull flag, but here's your power gap, right? Gap up on earnings, hasn't been able to close down inside the gap, and it's holding that gap as support. This looks good for more. And let me do one more. Joby. Joby is a fun little growth play. Broke out. This is a short squeeze for sure. Broke out on earnings, came right back down into the rising 21. Had that yesterday was a good day to get in. We did not. I didn't look at it yesterday, but it's almost an inside day bar and then follow through today. So it's a 3-bar reversal off of the rising 21. The MAs are stacked. Yeah. And all this bullish volume that probably is still in the trade is waiting for the next leg higher. I think you could buy this one here. We're long. Let me do one more. We're long Sophie in the live options room, and we had to kind of sit through all this sideways churn here, but now we're starting to get some really good traction. Earnings are out of the way, and we are banging up on range highs in a nice looking uptrend, stacked MAs, everything. See how you get down to the 21, can't get below? That is a strong stock. I mean, you start to see that again and again and again. Can't get below it, can't get below it. Test it, bounce, test it, bounce. That's when you want to get on and get into and hold for a while. All right, guys, let me see what you're interested in. Oh, we've got a few. Let's try cold. All right. So, yeah, well, way up. Well, this I wouldn't buy this one here, but I would certainly hold it if I'm already long. You've got, entry right here on that hammer. You've got an entry on the breakout right here. This is the 3x bearish version of the natural gas fund. And I had actually a tentative read on the bullish version of this when, gosh, I think it was down here. I'm forgetting where Boyle was. Oh, it was this little area right in here. Starting to see this volume coming in. It was down below range highs and starting to bounce back up again. And it was just, let's just keep it on the radar. And of course, it never gave us a buy signal. Now, I do like this. I actually like this as a bullish hold. Natural gas can be very fickle, and it can go up and down a lot overnight, because that's when the European traders are mucking it around and the Japanese traders are mucking it around. And you have to sometimes sit through this sideways churn where it's up one day, down the next for several days. But this is breakout, right? This is big breakout, and it's actually a breakout on top of a breakout. Yeah, no, it's good. It is very bullish, and I'm not sure I would. Again, I'm not sure I'd be a buyer here, but if you have some macro reasons to be bearish on natural gas, then by all means, jump in. Okay, I better do these quickly. So PANW has earnings in a couple of nights. They are Monday next week. This is in the cybersecurity space. It is one of the top 3 or 4 stocks in that space. Number one used to be Fortinet. I don't know whatever happened to it. It just kind of cracked and never really got back on track, I don't think. So here's the thing with Panwa. It got whacked down on, it was either a downgrade or it was a revision lower. That's not a good thing, right? And typically when that happens, you're going to hear more bad news during the earnings call. However, sometimes the market overextends, gets too far ahead of itself. And I think that's probably what's happening here, because this is a very good company, strong growth, and it's really positioned very well in the space. So I suspect that the earnings will be okay and the market will react positively. But I don't play earnings unless I'm in a long term position. I can't recommend playing earnings on this or any other stock, frankly, as a swing trade. Yeah. And also, anything can happen on earnings, but when you have a gap that is that big, right, that's a very big bearish gap, and you're down below all the moving averages. You even got down below the LRC, and that LRC is slightly rising now, but is probably going to start slanting downhill shortly. Um, that line right there is going to be your ceiling, unless something really amazing happens on earnings, and I just don't see it. I really don't. So I would avoid it. Let me take a quick look at Fortinet. Yeah, Fortinet. Yeah, look at this. So Fortinet came out with earnings and it was a disaster. So what makes us think Panwa in the same, sorry, Palo Alto, what makes you think Palo Alto in the same sector is going to do any better? I don't know what's going on with Fortinet. It used to be one of my favorite stocks. No longer. Crowd, I think, is up there, right? Yeah, Crowd's doing okay. Actually, I like this chart a lot better. This is much better, much better. You're above the 200. You're still uptrending. You do this kind of little ABC pullback. You've got a couple of green days down here, and earnings are still a week and a half away. So I would recommend Crowd over Palo Alto. Okay, SMR. I better do this more quickly. SMR, that bearish gap right there, I don't like. When you get up to new highs or range highs or multi-month highs, and then do a big gap down, and it's not even on earnings, something else is going on. That's bearish. Yeah, this is usually where you see a stock start to print multi-week pullback, or even maybe that's it for months on end. It doesn't get any higher. Could be totally wrong, and it doesn't look like earnings was helping it at all. And yeah, so I know this is in like the same space as VST and GEV and some others, but um, I think those other plays are better than this one. This I just don't like that bearish gap. I have a whole trading system that when you get up to 52-week highs, and then you have a gap down, and then you trade below the low of the gap down day, which it did on that red bar right there. It's a short signal, not a buy signal. So this is showing that gap down short signal. You'll find that in my trend trading book. The whole system is laid out there. Oh boy, I'm only going to do one per person because we're running out of time. AEHR. All right, this is good. This is bullish. I don't like the fact that the gap closed in, but it's not an earnings gap, so maybe something else is going on there. But it went way higher, came right in, closed the gap, and then it bounced quickly. That's what you want to see. Big green stick today. Volume is a little light, but that's not a deal killer. And it's bouncing where it should be bouncing off the 21. This is I'm not sure if I would buy it here with that big green stick, but it is certainly a good hold. If you got in this morning, you're in good shape. Yeah, I really like that. I like that bullish setup. DoorDash. Yeah, good. Bullish. Yeah, when you see these little soft pullbacks, right? Down, soft into the 21. Couple of days there, testing, then boom, back up again, back down again, back up, boom, big up on earnings, which is good. You want to see it go up on earnings. Back in to test the 21 again, and the reversal quickly today. I like this. In fact, this is a buy right now. If you're not in already, you could buy today. It's not a real big green stick, and I'm sure it's got a lot more upside. Where would you put your stop? You'd put it down below the 21, maybe about 245. It's up at 263. That's a fairly tight stop, 5-6%. And your target is not always easy to determine targets as much as stops, because you, especially with this blue sky breakout, right? You don't have there's no structure up there. You can do a Fibonacci extension. I sometimes do that. What I would prefer is just draw a trend line over the most recent 2 or 3 pivot highs, extend that out, and when it gets up and touches that, that would be your exit. Right. MP. So this one is, yeah, this has been a favorite momentum stock for a lot of folks. I think it looks to me, at least temporarily, like it's done. So it is up in the blue zone. That's typically where you see things cool off because it's 2.0 standard deviation away from the mean. But there's a lot of bullish stuff going on here. Don't get me wrong. Big gap up that never closed, second gap up that never closed, and a nice trend higher. It's just that this is not a buy. It's just not. This is a very low risk, I'm sorry, low reward, high risk setup here. If you're already long and you've got profits, trim and trail, right? Trim and trail. Now, where are you going to put your stop? Well, I would go about 3 or 4 bars down and put it beneath the low of that day, right? And then trail it up to the low of the next day, and trail it up to the low of the next day. But keep below those lows. Okay. TGTX. Yeah. So this would be, what I would call a recovery play if you're hopeful. If you know a lot of good things about the company, it's a biotech, a bad earnings announcement, which usually means they're not usually talking about earnings; they're talking about their pipeline. So the market doesn't like what they heard from the CEO on its pipeline, and that's the only reason why you buy a biotech is for its pipeline. So yeah, unless you know the company and think the market got it wrong, I would just stay away. That's an avoid from me. Okay, let me do two more. AN AutoNation. Yeah, I've been seeing this guy because it's been showing up every now and then on my A-list scanner or one of my strong stock scanners. And this is a bullish day. Yeah, it's having a very good day, and I like this setup. Yeah, I did get some distribution here around earnings. That's not always such a good thing. It gapped up on earnings and then it kept going south. That's not such a good thing. But the market doesn't always get it perfectly right. It probably was overdone. And the market is telling us now that, yeah, it was overdone. Anytime you have a fresh pullback breakout, which is what you've got today, you had the close yesterday above the 21 and the 50. You have the follow through day today, and it's the first day of a breakout. That's good. Very, very good. Now, doesn't mean that they just go straight up from here. Sometimes they do. More often than not, they don't. But they turn around, right? They kind of do a little bit of back and fill for maybe a week, and then you get the next big leg higher, and your initial target would be this cluster of highs up here at 215. So yeah, that's a very nice looking chart. I like that. It's bullish. One more open. This is a little $3 stock. I know a lot of folks in my pro trader group have been buying calls on it, the 250 calls. There's been a lot of flow into the 250 calls, various expiration dates. I know nothing about the company. I mean, I know the name, but I don't know anything about its fundamentals or its growth or its CAGR or anything like that. I'm just going to look at the chart. So it did have a gap. That gap is acting as resistance. It got up there today, pulled right back down. It got up there a couple of weeks ago, pulled right back down. Got up there a couple of weeks before that, pulled right back down. So, but there is a trading rule, and that is the more you knock on the door, the more likely it is to open. That may be what's happening here. I wouldn't kick anybody in the pants for buying this, but a small size as a potential breakout, and then you're back up to, the $3.50, $4 level. I don't know if it would sustain anything higher than that, but somebody does think that it will because they're buying a whole lot of these 250 calls. They've been buying them for several days. So yeah, keep an eye on it. I mean, obviously the best entry was down here below $2 when it pulled right back down again to the rising 21 period moving average. It got, kept in contact with it, and then started moving away from it. And that's where you would buy it at around 203, 204. And now you've got a 20% gain already. So it's a little bit higher risk, fair bit, to buy it up here at 243. And no guarantee that it's going to hold that level. Could very easily roll back down and hit the $2 level again. I'm just talking about the technicals here. I know nothing about the company. But as a little lotto play, sure, why not? Or buy some of those 250 calls. You probably get them for 40 cents, $40 each, something like that. All right, guys, I'm going to let you go. I will record this or produce it and get a link into the rooms, and then we'll wind up. We have 1 hour left. We will wind up the last hour of trading, the power hour trading together. God bless everybody. See you back in the room in just a little bit. Bye for now.